Was really good. Was really good. We back at it again. You already know what it is. So today's video and topic is a longer-awaited video, which is on liquidity, liquidity concepts. I've been wanting to push this video out because I keep bringing it up in videos, and I know most people probably don't know what it is, or especially if you're a beginner. So finally, we got it out. The things you're going to learn in this video are going to be what is liquidity, where to find liquidity, what fuels and is the ultimate reasoning behind liquidity, and how to avoid being what is considered in, you go on the gram and you'll see it, which is being called somebody's liquidity, how to avoid getting caught in liquidity sweeps and just randomly getting stopped out. As you can see by the thumbnail, which I know a lot of you and I have myself, because everyone has before until they learn this concept, is they wonder why they get randomly stopped out when it was doing so good and woo. And you're gonna learn in this video. So let's get straight into it. As you can see, we already got a few supply and demand zones charted out. We're just trying to get it situated because I don't want this video to be super long, but I also don't want it to be super short because I mean it's gonna be super quick. I want y'all to understand everything importantly, because this is one of very few concepts that is very important and very needed to be understood otherwise. And I don't mean this in a mean way or harsh way, but you are going to be less likely to succeed if you cannot understand liquidity and avoid it, because that's what's going to ultimately ruin your journey. All right. So let's get this thing going. So liquidity in simple terms is money, which could either be you or other people who didn't wait, which I'll explain in a second. But liquidity is money, or in other terms, people's stop losses, okay? Now, where is liquidity? Liquidity is at every high, so here, and every low, so here, all right? So liquidity is here. So people enter into sell positions here, or maybe here or here, or put the stop losses and break even here. That is all liquidity. Your stop loss is essentially the liquidity. All right. And again, same with every high, same with every low, which I'll go in more detail on how this is even liquidity and et cetera, et cetera. All right. So liquidity is just simply money, people's stop losses. Okay. And you find them again at every high and every low. And what fuels them and what causes them is just like the supply and demand zones, just like everything, because this is how the market is just ran, which is big banks, institutions, and the market overall purposefully manipulating to succeed in their own success in these markets and ruin everybody else, essentially. There's going to be liquidity here, liquidity here, and liquidity here. All right. So we're talking strictly about this sell side, this little sell side move right now. So price came up and tapped into this POI, this supply zone, and then price pushed down and formed a lower high right here, respecting structure, because market respects structure unless it's just not in its overall plan to continue in that, in this case, downside move, and it's going to continue upwards. So it respected structure and never swept liquidity, which I'll explain what a liquidity sweep is if you don't already know. And then same thing here, didn't sweep liquidity. And eventually, after all these people who enter into sell positions in these 3 points and have their stop losses above each of these highs, thinking it's going to sell, they eventually get stopped out. A liquidity sweep is when price is pushing in a certain direction, comes back up in a strong manner to sweep each and every single one of these highs, which is everybody's stop loss. So if you entered in a sell position here, all right, stop loss above those highs, guess what? You would have got caught in a liquidity sweep. This is a situation that everyone goes through, and they're like, oh, how was it selling so great? And then boom, I get stopped out because of that. Your TP is all the way down here because it's the last point price has been able to get to within this demand zone. Didn't even reach it, and boom, you got stopped out. All right. And that would be a liquidity sweep. Now, what fuels that liquidity sweep, or what causes the market to even do that when clearly it should be continuing in this sell side move, or you would have thought with your overall bias it would have, and why it didn't is because of market manipulation. All right. So market manipulation is essentially just the big banks, institutions, and the market overall purposefully pushing price in a certain direction to get what their overall goal is. All right. So in this scenario, price was selling, but there was no liquidity swept. Therefore, price got manipulated and pushed all the way up to purposely stop everybody out and fuel this big sell side move. Okay. Now, you might be like, well, how do they do that? Essentially, again, at every high, there's liquidity, which means it needs to be swept because the market ultimately, like I've said in many videos, it seeks liquidity and it seeks balance. In this case, it's seeking liquidity because there's no impulsive candles that need to be balanced, right? There's no gaps or anything. But it never swept liquidity at these points. Therefore, we know that it's going to sweep that liquidity as soon as it gets a chance to, whether that's now or significantly later. So it's going in this sell move and it's not sweeping liquidity because there's not enough buyers in the market. And when there's not enough buyers to counteract this sell side move, that means the market overall goal to sweep liquidity can't happen. It can't sweep liquidity, stop you out and feel a big sell side move like it wants to because there's not enough buyers in the market. So they manipulate the market by buying a bunch of orders in bulk, whether that's sell orders or buy orders, regardless. Just like I said in the supply and demand video, they buy the orders in bulk. So they put in a bunch of buy positions. They buy a bunch of buy orders in bulk to purposefully push the price up, whether it's significantly big like here, or maybe even just slight moves. Regardless, they purposefully push that price up because there's not enough people in the market to push price up so then they can get all that money back from people getting caught in that sweep. Therefore, they purposefully push it up, stop you out, and then fuel that big move, the sell side move in the situation to get their ultimate goal. Is it messed up? Yes, but that's just the market. Sorry, my camera's a little glitchy. But yeah, so that's why you need to be patient and you need to be diligent. In this situation, you should not have been entering in a sell position anywhere at these highs. As much as it looks like, oh, guess what? Okay, even tons of rejections and then boom, tons of sell side pressure within that candle. Long wick, small body, right here, long wick, small body, push downwards. Lets you know there's sell side pressure. So you try to enter in that for that trade. But guess what? Or you try to enter here when it formed that lower high and kept pushing down. There was no liquidity swept. And if you pay attention to my videos, as I said, and you can go watch anyone else's, the market seeks liquidity and balance. Therefore, the moment you enter in there without liquidity being swept, regardless if you know it or not, you are going to get stopped out unless you pull it early or your TP is significantly short. So you want to wait. You want to wait for price to sweep liquidity at these highs right here. And then you want to wait for confirmation. All right. You want to wait for that. In this case, it's sell side confirmation that after this sweep, it's going to push downwards, which unless this just immediately jolted down, you could have gotten around like here-ish and took that sell side move to this demand zone here, or even this demand zone to the farthest extent price has been able to get to. Now, into some other concepts with liquidity is not only are at all these highs and lows are there stop losses. So there's stop losses here and there's stop losses here. There are also buy orders and sell orders, or buy limits or sell limits. Essentially, you just put the order in a specific area. If price reaches it, it immediately puts you in, regardless if you manually put it in or if you're not at your desk or phone or whatever. And that is the second form of liquidity. Is not only would you get stopped out because you didn't wait for a liquidity sweep at these highs, there are also people getting stopped out who got entered into buy positions here. Because like I said, market respects structure. Therefore, if it breaks structure, which in this case, price, if it wanted to respect structure, shouldn't have broken that high and should have formed another lower high. People think and believe, and they put buy orders or buy limits above those highs, that if price breaks that, it's going to continue upwards. Therefore, they either manually put it in or they get put in automatically, and their stop losses are probably below that low because some people put their stop losses that low. Maybe a TP, we'll just say deeper into the demand zone because it's a big, supply zone because it's a big supply zone. All right. And then guess what? They get stopped out. And guess what? There's buy side stop losses right here. So not only did people who got entered into buy positions at this high that got broke get stopped out, it also swept liquidity here, stopping people who had buy positions here and stop losses below. They got stopped out. Guess what? There's more liquidity here and here, old liquidity. And then guess what? Hit that demand zone that never been touched. Immediate rejection and a huge upside push, not strictly just because of the demand zone, but also because of all the liquidity that was swept here, here, and here, and here, and here. All right. And then vice versa with sell positions. People, all right, so right here, all right, price broke that low right there. So people think that it's going to start selling if it breaks that low. But guess what? That's just a liquidity sweep because this buy move, those are buyers. Stop losses are below that low. Therefore, they're getting stopped out as well just to fuel a big upside push. And then, yeah, like I said, sweeps out liquidity, boom. And then all those people who entered into sell positions right there, finally didn't fully extend it, who got entered into sell positions after it broke that and put their stop losses above that high, guess what? Stopped out. Didn't even hit or wasn't even near where their TP was. So now the next thing you might be like, oh, well, okay, so I got to wait for it to sweep liquidity. Well, what if there's like 3 or 5 or 6 different levels of liquidity that hasn't been swept? Which one do I go for? You go for the last one or you go for the one in the POI. With me, I'll put up an example right now because I took a trade last week like this because I waited. Again, when price hits that POI and forms liquidity, that's the main liquidity that the market is going to seek because the market knows where the liquidity is going to be. So it's not going to stick here and then spit down. It's going to catch all of that liquidity, but primarily, even if there wasn't any liquidity here, it primarily wants to get this because guess what? There are more people in sell positions within this POI zone that entered when they saw that sell side pressure. Therefore, there are more stop losses, which means more money compared to here because people are in break even or slightly negative or here, which is why instead of sweeping here and going down or sweeping here and going down, it went to here because price hit that supply zone, which means and gave that sell side pressure. So tons of people enter into sell positions, which is why there's all that pressure, which means there's a ton of stop losses. Therefore, the market is going to seek this big old liquidic pool instead of these small little liquidic areas. A better example right here. Price swept liquidity here. Guess what? Long wick above where liquidity was swept. So you would have entered into that buy position. Guess what? Stopped out. Because that isn't the only level of liquidity, and that's not the main one the market's going to be looking for because there's liquidity here and there's liquidity here at this POI zone. Now, you might be like, oh, well, it went further than that did. Well, there's also 2 other levels of liquidity that haven't been swept. That are the closest ones. And guess what? Amongst that, tapped into this POI zone, this demand zone that was just formed, which gives an even bigger push to the upside on top of that liquidity sweep. So you wait for it to sweep the highest high in this scenario right here, or the last level of liquidity, that's the closest, but primarily what's in the POI zone. Now, what to add on to waiting for it to sweep primarily the one that's in the POI zone, because again, there's going to be more liquidity and more stop losses in that area, you also want to wait for confirmation. Trading is a waiting game, and trading is a patience game. If you do not wait and if you cannot wait and be patient enough to wait for this liquidity to be swept because you're so desperate for this, this one opportunity, like there isn't 100,000 more opportunities that are going to come, you're going to get stopped out and lose all that money instead of winning all of that money. You're going to lose all that money up here when you could have won all of that money. All right. But adding on to it, because not only do you need to be patient and wait for that liquidity sweep, you need to be patient and wait for confirmation. That's a bar. That's a straight up bar. You need to be patient and wait for confirmation. You know what I'm saying? That's gonna be the new saying. All right. If you're able to be patient and wait for this liquidity sweep, you need to be patient and wait for confirmation. This was a big bullish candle. Didn't leave any confirmation that it was gonna stick down and fuel this big sell side move. Now, until it gave this big bearish candle, which means you could have either entered late and then caught all that, or you be diligent and you be aware. You realize, okay, liquidity swept all three of these levels, primarily this one, this high in this POI zone. Not only that, it's clearly showing me tons of sell side pressure with how quickly it keeps jolting down, which eventually led to this big bullish bearish candle. So, which this is actually going to be the trade that I show. Because last week, at a similar situation, I waited for liquidity to be swept. It didn't give me the best confirmation with the last candle because it was big bullish, but I started seeing the sell side pressure start to form when that second candle came in, and that's what I entered off of. And guess what? I caught a nice little trade. I caught a decent little trade. You feel me? And I'll post that. If I haven't already put it up a second ago, I'll put it up now. All right. And that's just a visual example. And it works. You can't go wrong with liquidity concepts. And the moment you master and truly understand liquidity, and again, master and understand your just emotional side and the patience, then you will be able to take trades with less worry if it's not going to work. And if it still doesn't work, that's market manipulation. Move past it. It happens to everybody. Don't break yourself down. So, in this case, again, you wait for that sell side confirmation and you take that trade. So, unless this candle just immediately jolted down, if you start seeing that sell side pressure form I'd say about there, you got it. Stop loss above where it needs to be. And then you put your TP wherever, which could be here, which is where your original TP was if you would have entered here. Or you could have taken partial profits or held it to even here, immediately at that demand zone. And then same thing with the buy side over here. Like I said, price swept that liquidity. There was also more liquidity to be swept because there was still a ton of sell side pressure, which leads more into when you should truly be looking in. Again, you want to wait for confirmation. There's still clearly a ton of sell side pressure. Therefore, I'm not going to be looking to enter in yet because there's still a ton of sell side pressure on top of still a ton of liquidity that still hasn't been swept yet. So I'm going to wait. If I miss it, I miss it. I'll catch the next one. All right. But me, moment it hits that after sweeping all that liquidity, flips, color change, and that long wick and medium body all the way to the top, I'm in that. Probably around there. And I'm taking that thing all the way to that demand zone. And guess what? Shmoney. You could have even held it further up, deeper in that demand zone to an area where price is shown it could get to. Right here. Boom. Shmoney. 1 to 6 RR. That's a beautiful trade. And all that just from simply being patient and understanding liquidity and liquidity concepts. And overall, following your plan and being diligent and being disciplined. I am not going to enter into this trade right here because liquidity has not been swept. Because it should have swept here. instead of forming the lower high. I am not going to enter in the trade until that liquidity is swept, because I know from JT's videos, from any other trader's videos on liquidity, I'm not going to enter into that trade until that liquidity is swept. I don't care how long you have to wait. If you feel like you don't want to wait that long, then get off the charts or change markets and look for a different thing. If you cannot be patient and wait. All right, simple as that, so you don't make a stupid decision. You are not going to enter in here. You are going to wait. Just because it gave you a ton of rejections and that candlestick pattern right there with that long wick and small body to the bottom clearly was respecting structure with these lower highs and making lower lows, does not mean you forget about the fact that there is liquidity at each and every single one of those highs. There is tons of liquidity at this high in this POI zone. So you know price is going to push up and sweep that liquidity. So wait. And then catch that big sell side move. All right. And then this will be the last thing when it comes to liquidity sweeps, is a continuation and a reversal. And this plays into being patient and waiting for confirmation. Price here compared to here pushed even further down. Let's say there was no extra liquidity, because price will do this. It'll push steeper in there, manipulating even more, making it seem like, oh, there's no way it's going to reverse and go up, because look how far it's going down. And then guess what? Pushes all the way up, because it's still manipulating you by going even further down. In this case, it ended up sweeping more liquidity. Therefore, you be patient and you wait. You wait for the confirmation, okay? Right here, boom, it stuck it and went. You wait for that sell side pressure to let you know that it's not going to continue. It's not going to have a continuation after that liquidity sweep, because again, it broke that high. Therefore, realistically, it disrespected structure, so it should keep going up. Therefore, that liquidity sweep can still lead into a continuation. I've had old trades, crappy trades, but old trades where I used to put buy stop orders above highs. If it breaks that, then we're good. Those were liquidity sweeps, and for the most part, it worked. But those, not anymore, but those were liquidity sweeps that ended up just kept going into continuations instead of just immediately reversing. So again, you need to be patient and disciplined. You need to wait for the right confirmations right after that liquidity sweep. If it's not giving you the right confirmations, which is sell side pressure, all right, is there any more liquidity? You wait for all the confirmations. And most of all, you make sure that in this scenario, if it's in that POI zone, you wait for that to get swept, because it's going to sweep it. As much as it might seem like it's not going to reach it because it keeps getting pushed down, you wait. Because just as quickly as it's getting pushed down and looking like it's not going to hit this first level liquidity, is as quick as it will push up again, stop you out, hit that liquidity, and then push straight down. So you need to be diligent and you need to be patient. You need to wait for confirmation, because it could be a continuation. Get what I'm saying? Dang, should be a rapper. No, I'm playing. But yeah, so that's liquidity concepts. Now you know what liquidity is. You know where to find liquidity. You know what fuels liquidity and what the overall basis behind it is. You know what liquidity sweeps are, and now you understand why you keep getting stopped out of your trades when it seems like, oh, it should have kept going, or you get stopped out of your trades and, oh, I get stopped out and it keeps going, and then eventually it goes back in the right direction. Why does this happen? Liquidity. I really hope you took this video to heart and truly understand it now. If you need to rewatch it, slow it down, whatever. Because the moment you understand this, opens up a broad view of the type of trades you can be taking and the type of trades you can avoid taking, so then you can take more, so then you can receive more wins and push away all those losses. Because now you understand why you keep getting stopped out so randomly, and then it goes in that way when it seemed like it wasn't going to go, and then you just get stopped out and you didn't even get that money because you didn't wait and you didn't know liquidity concepts. So I hope you learned you something with this video. Today's June 8th, which is when I recorded and I'm going to post this. Tomorrow, gonna be fully going public with my mentorship company. Don't worry, this isn't about to be some BS. Woo woo woo. I am offering, and it's gonna be a over a lifetime thing until I decide to be done with the company. I will have a 1.5 hour free session one-on-one, so you can build your trust with me. You can see what type of person I am, and you see if you even like me. Because I don't want you to give me money and then you don't trust me, you don't like me. Because now you just gave me money. So now, and not only am I offering an 1.5 hour session for free, and you can ask any of my students because they'll probably be watching this video and they might be in the comments. I am being so legit. I'm a man of God. I'm not gonna lie to you. I'm not gonna lie to nobody. All right, and he can strike me down if I am. I genuinely want to see you succeed. I'm not like all these other traders. Oh, I want to see you succeed. So buy my course within 48 hours because it'll be $48. But if you don't, it's going to jump up to 500 because my fees after that 1.5 hour free session is $15 to $25 a session max. And it's not going to change because like I said, I genuinely want to help people. If I wanted to, I didn't even have to charge fees, but I did. But the least I could do, because I genuinely want to see people succeed, is not charge obscene fees. You can get a 2 hour session, for $25. And you are going to get the same value and the same information that you would get from any of these other traders that you would love to go learn about. But guess what? You don't have $500 to $1,000 because that's why you're trying to trade, to get $500 to $1,000 a day. And you don't have that right now. And I understand that because I was at that point. I wanted to get these courses and these one-on-one mentor things, but guess what? It's $500 to $1,000. I don't have that. So I am trying to do what other traders want, which is genuinely give you the same value and the same information that you expect so then you can succeed in trading the stuff that you genuinely need and understand at an affordable fee if you want to push past, if you want to go further than my 1.5 hour free session. All right. I want to be as genuine and as transparent as possible. I post all my trades, I post any losses, I post any wins, etc. on my Instagram. I want to be as transparent as possible. I want to be as helpful as possible and as genuine as possible. I'm a man of God. This is a gift and an opportunity God blessed me with, and I want to share it upon people and help them out. And I want to genuinely help you succeed. Share the information that I've been blessed with and help you succeed in these financial markets that I've been blessed with as well. And show you what extent you can get to if you do the right things, if you learn the right things from the right person. And I might not be the right person for you, which is why I have an 1.5 hour free session. So then you can see if I'm the right person, if you like me, if you genuinely trust me. And if you want to move further from there, I'm willing to adjust and do whatever, and help out in any way. I'm willing to help out in any way, whether that's, just any way. You feel what I'm saying? If you're going through stuff, let me know. I'll be generous in terms of if you already used your free session, I'll be generous in terms of maybe offering another free session, another 2 free sessions. I want to genuinely help you. So you don't even have to, you don't even have to move past that free session. Use that 1.5 hour free session. See if you genuinely like me and trust me. Because again, I want to help you. One-on-one sessions are a lot easier to teach and be able to learn compared to trying to do it yourself. And I want to help you. So that'll be in my bio, which already is, and in the description. If you want to use that, again, use that 1.5 hour session. You're going to learn you something. It's going to be very valuable, and you will not regret it, I promise you. But that's the end of the video. Hope you liked it. You can subscribe, go to the gram, whatever you want to do. I'm trying to help some people out. I'll see y'all.